US President Donald Trump's recent jibe at India's dead economy, as he called it, has drawn censure from Indian quarters, expectedly. In a recent press conference, RBI Governor Sanjay Malhotra refused to comment on the US President's statement, but pointed out that India's contribution to global growth in percentage terms was higher than the US's. So that spurs the interesting question: whose economy is now more fragile? How is the US economy doing? And how is India poised as it braces for impact from US's tariffs? Hello and welcome back to Business Matters of the Hindu with me, K. Bharat Kumar. A comment that pointed to jitters around the strength of the US economy came during an earnings call with analysts by fast food giant McDonald's. CEO Chris Kempczinski said, "There is a lot of anxiety and unease with the low-income consumer. I think we could all speculate the reasons for that, probably tariffs and the impact that that might have, and questions around the employment situation. But it's clear from the data that not only are real incomes down, but sentiment is also down." He pointed out that low-income consumers are actually trading down. What he means is if they at all come into their restaurants, then they are trading down for items in the menu that are at a lower cost, or trading down by not having breakfast, or trading down by having breakfast at home instead of at a quick service restaurant nearby. Of course, the sense that one gets from that earnings call is that there are too many moving parts in the US economy currently for anybody to be able to pinpoint a particular reason as to why a certain trend is happening. In the quarter ended March, the US economy contracted faster than previously thought, accompanied by muted consumer spending. The Trump administration's tariffs on imported goods was likely beginning to have an impact. In that quarter, GDP actually contracted 0.5% and not at 0.2% that it was originally thought to have shrunk. Of course, in the subsequent quarter ended June, growth sprang back and the economy grew at 3%. Earlier this week, in an article, Bloomberg pointed out that smaller companies in the US, especially those with fewer than 500 employees, are said to be what it called clobbered by tariffs. In 2023, this sector drew in revenues of $868 billion. And now, because of the tariffs coming in, they are set to face additional costs of $202 billion. In that article, analysts pointed out that these companies typically do not have the resources that they have to dedicate to offer proof to their government of compliance with new tariff rules. Meanwhile, how has the Indian economy fared? India's GDP growth has been slow but steady in the recent past, even if it has not been at the 8% that it aspires to grow in order to become a developed nation, achieve that status by 2047. In its most recent forecast, the RBI maintained the growth outlook for this year for the Indian economy at 6.5%. The Reserve Bank acknowledged that prospects of external demand remained uncertain amid ongoing tariff announcements and trade negotiations. Prolonged geopolitical tensions, persisting global uncertainties, and volatility in global financial markets pose risks to growth. Now, which sectors in India stand most exposed to the Trump administration's tariffs of 50% and above that are set to kick in? Some have already said that companies within those sectors see the end of the road for them if these tariffs are not rolled back in some form or the other. Kerala Chief Minister Pinarayi Vijayan has said that the US was the second largest importer of agricultural products for the state, and the tariffs kicking in could severely impact the state's fortunes. Now, which other sectors could see very high impact from the tariffs kicking in, and these tariffs kicking in at the end of this month? The Global Trade Research Initiative, or the GTRI, gives us a snapshot. It points out that other than petroproducts exports and electronics such as smartphone exports, every other industry would see some form of impact or the other, significant or very significant. Shrimp exports see significant impact. They go from 0 to 50% in the new regime. Petroleum products, not impacted. They used to be 6.9%, they continue at 6.9%. Organic chemicals go from 4 to 54%. Carpets from 2.9 to 52.9. Apparel, textiles, they all see significant impact going up to or even above 60%. Apparel, whether it's knitted or woven, sees 63.9 and 60.3%. Steel, aluminum, and copper go from 1.7 to 50%. Vehicles and parts go from 1% to 26%. Now, obviously, it's not clear yet how US tariffs will impact other nations, how these tariffs will impact US's own fortunes in terms of GDP growth and inflation rates and so on. Now is probably a time to get less serious and look at some strange, unique, or what is called weird coincidences that have happened when recessions have set in the past. To note, economists still don't look at these factors very seriously. They still look at GDP growth, tax collections, inflation rates, and so on as indicators of economic health. But it's probably a fun thing to look at, even if you cannot prove that there is a correlation between these indicators that we're about to look at now and recessions that have come in the past. Rising sales of Labubu dolls. In an article earlier this month, the New York Post said these dolls have been spotted dangling from Louis Vuitton and Saint Laurent purses as fashion's quirky new status symbol, but their popularity could soon spell doom for the economy, it said, citing an economic expert. The article goes on to point out that consumers typically gravitate towards what are called affordable luxuries, and it cites the example of lipsticks, ice creams, movie tickets, and so on. These are collectively referred to as the lipstick index, and the Labubu dolls are possibly the latest iteration of this index. The second one is called the men's underwear index, and we've seen this before. Former Federal Reserve Chairman Alan Greenspan once famously hypothesized that when the economy tends to slow down or go into a recession, men tended to defer or avoid purchase of new underwear. In addition to these, there are several quirky indicators that seem to be doing the rounds in social media. But as we said, serious economists still tended to look at GDP growth, inflation rates, industrial production, tax collections, and so on as indicators of economic health. That brings us to the Did You Know section that we have for you always in every episode. Here it goes. Did you know that Labubus were storybook characters created by the artist Kassing Lung? An article in the NPR tells us that Lung, born in Hong Kong, moved to the Netherlands at the age of 7, where he quickly fell in love with Nordic fairy tales, especially those about elves. Inspired by the whimsical folklore, Lung launched an illustrated book series called The Monsters in 2015, featuring a playful tribe of female elves known as Labubus. And here's a quiz question for this week. How much did a Labubu toy sell for at the first recent Labubu auction conducted by a Chinese auctioneer? And the answer to last week's question, the question was, how much rain did the Thar Desert receive in 2023 versus what it did in 2001? By inference, here's the answer. Rainfall has increased at a rate of 4.4 millimeters per year after 2000 on average. The average rainfall was 200 millimeters in 2001. At the given rate of increase on average, rainfall would have measured 324 millimeters in 2023. That's all we have for you in this episode, folks. If you enjoyed what you saw, do not forget to like, share, and subscribe. Until we meet again, have a wonderful time ahead.